Hey guys, let's talk about inflation. Last week, economist Paul Krugman tweeted, "Over the past couple of days, I've had several conversations with smart people who follow the news and had no idea that inflation is way down, presumably hasn't broken through at all to the wider public." To which Julian Farrar replied, "Prices are still higher and rising. Everyone is still poorer. Probably has something to do with it." And then he added, "I don't get why people aren't able to casually calculate the second derivative of prices of a basket of goods in their head and then fail to give the government credit for that arbitrary number being negative." It's a brilliant response to how tone-deaf academics like Krugman sound when trying to relate to the everyday American consumer. Parker Lewis wrote an excellent blog post expanding on some of the inflation metrics like CPI and why there is a real disconnect between the official statistics coming out of Washington and consumer sentiment. Check out his blog gradually-then-suddenly.xyz for the whole essay. It's definitely worth a read, but here are some of the most salient points. Price levels of basic goods and services are increasingly suffocating more and more Americans, especially those with very little savings. With 58% of Americans living paycheck to paycheck, that represents the majority of hardworking people in this country. But it's also not just limited to people with little savings. Everyone can feel the effects of inflation. Even still, the ivory tower, Ivy League professor, was surprised to learn anecdotally that, quote, smart people did not know that inflation is, quote, way down. But when challenged with the fact that inflation continues to rise, just at a slower pace, Krugman was again surprised that the perception of inflation was tied to actual price levels, rather than the rate of change month to month of a year-over-year metric. At the end of the day, it is an indictment of Princeton, the entire Ivy League, the New York Times, the American political class, for which Krugman is a puppet, and anyone in America still listening to economists. Parker goes on to talk about why the Consumer Price Index itself is a scam, writing this: "The basket of goods and weighting of individual goods included in the CPI changes over time because the consumer's inability to keep up with actual inflation, i.e. change in wages versus rising cost of current standard of living, is what drives substitution to lower quality goods in the first place, i.e. the changing basket of goods and changing weight of individual goods. In more plain language, the consumer cannot spend money it does not have, and the single input most affecting overall spending levels and price levels is the change in the money supply, which dictates the change in the overall size of the U.S. credit system." We've all probably heard the rallying cry of overnight sensation Oliver Anthony and his song "Rich Men North of Richmond."
Living in the new world with an whole soul. These rich men north of Richmond, Lord knows they all just wanna have total control. Wanna know what you think, wanna know what you do, and they don't think you know, but I know that you do. 'Cause your dollar ain't shit, and it's taxed to no end, 'cause the rich men north of Richmond.
The frustration is palpable and being felt by Americans all over the country. So what is the problem and how can we solve it? Parker Lewis makes a pretty clear case on what he thinks is going on. Quote, "The economic structure is broken, and it all starts with the centralization of the money supply. Bitcoin is the only way out because it fixes the root problem that caused the current economic system to break. It fixes the money. The centralization of the money supply and the power to create money out of thin air is the problem. It is the source of inflation, and worse, it causes the entire economic structure to fracture." So why does centralization lead to creating money out of thin air, and therefore inflation? Tucker Carlson recently traveled to Argentina to find out. That country, of course, has been ravaged by inflation and capital controls for decades, leading to massive currency devaluation and widespread poverty. Carlson makes his case for what's at the root of the problem.
For politicians, money is power. They always crave more. But because they don't actually produce anything, they've got limited ways to get it. They can hike taxes on the population and collect the cash at gunpoint. That's the most straightforward way. But it's also highly unpopular. Voters don't like paying higher taxes. They resent it. So over time, most politicians in most places decide it's a lot easier to devalue the currency. You keep the tax rate pretty much the same, you just print more money. At first, most people don't even notice that it's happening. The money seems free. This is how the US government just paid for the COVID checks and the war in Ukraine and pretty much everything else that Washington has done for the past couple of decades. Just churn out more dollars. You can see why it's a popular strategy. But what happens if you keep doing it year after year?
Well, if Carlson is right, I think we might find out. The good news is there is a better money. It's Bitcoin and it's decentralized. No one controls it. No one can print more of it. No one can tell you what to spend it on or when. And it might just be the best chance to escape a broken monetary system before it's too late. If you found this video valuable, go ahead and like and subscribe, and check out some other videos I've done in this series.